Let's get ready for the Kentucky real estate exam with 100 questions covering the state-specific laws, principles, and practices you'll need to know. And don't miss what's happening in the bottom corner. It could be key to your exam prep. We'll tell you how in a minute. Now let's get started.
Let's get started with a review of Kentucky real estate law and practice. Fair housing laws in Kentucky. Which protected class was added last to the Federal Fair Housing Act as recognized in Kentucky? Is it A, race, B, color, C, handicap, or D, national origin? The answer is C, a handicap. The Fair Housing Amendments Act of 1988 added handicap and familial status as protected classes. Kentucky adheres to these categories, ensuring individuals with disabilities are protected against housing discrimination. In Kentucky, what must real estate professionals do to comply with fair housing advertising rules? Is it A, avoid mentioning any family status, B, indicate a preference for certain racial groups, C, specify that pets are not allowed, or D, list age restrictions for all developments? The answer is A, avoid mentioning any family status. Kentucky fair housing laws, aligned with federal standards, mandate that advertising must not suggest preferences, limitations, or discrimination based on familial status, race, or other protected classes.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
What entity is responsible for enforcing fair housing laws in Kentucky? Is it A, Kentucky Real Estate Commission, B, Kentucky Department of Housing, C, U.S. Department of Housing and Urban Development, or D, Kentucky State Fair Housing Authority? The answer is C, U.S. Department of Housing and Urban Development. HUD is the primary agency for enforcing fair housing laws nationwide, including in Kentucky, where it handles complaints and ensures compliance with anti-discrimination laws. In Kentucky, which of the following actions is a violation of fair housing laws when selling a home? Is it A, refusing to sell based on buyer's wealth, B, refusing to sell based on buyer's religion, C, refusing to sell due to buyer's bad credit history, or D, refusing to sell based on buyer's age? The answer is B, refusing to sell based on buyer's religion. Kentucky adheres to the Federal Fair Housing Act, which prohibits discrimination based on religion. Refusal to sell due to religious reasons breaches these laws. How many protected classes are identified under the Federal Fair Housing Act applicable in Kentucky? Is it A, 5, B, 6, C, 7, or D, 9? The answer is C, 7. The Federal Fair Housing Act, recognized by Kentucky law, protects against discrimination in housing sales, rental, and financing based on 7 core categories: race, color, religion, sex, national origin, handicap, and familial status. What is one responsibility of the Kentucky Real Estate Commission in relation to fair housing laws? Is it A, drafting federal housing policies, B, enforcing state fair housing laws, C, setting municipal zoning regulations, or D, issuing building permits? The answer is B, enforcing state fair housing laws. The Kentucky Real Estate Commission enforces fair housing laws by overseeing compliance and addressing complaints, ensuring all agents and brokers adhere to these laws. Under Kentucky fair housing laws, which of the following is considered a discriminatory practice? Is it A, refusing to negotiate with a potential buyer due to their nationality, B, offering homes first come first serve, C, holding open houses on weekends, or D, requiring financial proof before an offer? The answer is A, refusing to negotiate with a potential buyer due to their nationality. Discriminating against potential buyers based on national origin is prohibited under fair housing laws, aiming to offer equal housing opportunities. Real estate contracts in Kentucky. What element is typically not required for a valid real estate contract in Kentucky? Is it A, competent parties, B, legal subject matter, C, written format, or D, acknowledgement by a notary public? The answer is D, acknowledgement by a notary public. In Kentucky, a valid real estate contract must include competent parties, mutual consent, a legal purpose, and consideration. Notarization is generally not required unless specified by the agreement. Which of the following must be included in a Kentucky real estate purchase agreement to make it enforceable? Is it A, an attorney's signature, B, date of contract execution, C, property's appraised value, or D, record with the county clerk? The answer is B, date of contract execution. According to Kentucky real estate laws, the purchase agreement must be documented with mutual consent, consideration, property description, and party signatures to be enforceable. How is the term consideration best defined in the context of a Kentucky real estate contract? Is it A, a signed agreement, B, monetary compensation, C, value exchanged, or D, mutual benefits? The answer is C, value exchanged. Consideration in a Kentucky real estate contract refers to the value exchanged between parties, which can be monetary or involve promises of performance or services. In Kentucky, which party typically holds the earnest money until contract closing? Is it A, the seller, B, the buyer, C, the listing broker, or D, the mortgage lender? The answer is C, the listing broker. Per Kentucky real estate practices, the listing broker usually holds earnest money in an escrow account to ensure neutrality until the transaction is completed. What happens if a buyer breaches a real estate purchase contract in Kentucky? Is it A, they lose the earnest money deposit as liquidated damages, B, the seller is entitled to a percentage of the listing price, C, the real estate contract becomes null and void with no consequences, or D, the buyer may resell the contract to another party? The answer is A, they lose the earnest money deposit as liquidated damages. In Kentucky, if a buyer breaches a purchase contract, they typically forfeit their earnest money to the seller, serving as liquidated damages as agreed in the contract terms. What is the primary purpose of a contingency clause in a Kentucky real estate contract? Is it A, to secure a fixed interest rate for the buyer, B, to outline conditions that must be met for the contract to proceed, C, to reduce property taxes for the seller, or D, to transfer ownership rights immediately upon signing? The answer is B, to outline conditions that must be met for the contract to proceed. Contingency clauses in Kentucky real estate contracts allow the buyer or seller to void or modify the agreement if certain conditions are not met, such as financing approval or satisfactory home inspections, to ensure clear terms before proceeding. Which document must a buyer sign to acknowledge receipt of a property disclosure in Kentucky? Is it A, inspection guarantee form, B, acknowledgement of receipt form, C, loan commitment form, or D, title insurance application? The answer is B, acknowledgement of receipt form. In Kentucky, buyers are required to sign an acknowledgement of receipt form to confirm they have received the seller's property disclosure as part of transparency and protection in real estate transactions.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Disclosures required by Kentucky law. What is the primary purpose of the seller's disclosure form in Kentucky real estate transactions? Is it A, to guarantee the condition of the property to the buyer? B, to inform the buyer of any known property defects? C, to manage the appraisal process? Or D, to establish the fair market value? The answer is B, to inform the buyer of any known property defects. The seller's disclosure form is essential in providing buyers with knowledge of any existing property issues, fulfilling the seller's legal obligation to disclose known defects as per Kentucky law. Which of the following statements is true regarding the lead-based paint disclosure requirement in Kentucky? Is it A, it is required for all residential properties regardless of the construction date? B, it only applies to properties sold in industrial zones? C, it applies to residential dwellings built before 1978? Or D, it is optional and can be decided by the seller? The answer is C, it applies to residential dwellings built before 1978. Lead-based paint disclosure is crucial for properties built before 1978 due to potential health risks. Sellers must notify buyers of any known lead-based paint hazards as per federal requirements. What is the role of a seller in regard to disclosing property defects in Kentucky? Is it A, to repair all known defects before closing the transaction? B, to disclose latent defects that are known to the seller? C, to ignore defects that are not visible? Or D, to conduct a full inspection for uncovering defects? The answer is B, to disclose latent defects that are known to the seller. Kentucky law mandates that sellers disclose known latent defects, as these issues aren't typically discovered through a standard home inspection and could impact the buyer's decision. Which document helps to ensure compliance with the Megan's Law regarding sex offender disclosures? Is it A, the Property Condition Disclosure Statement? B, the Neighborhood Crime Report? C, Kentucky does not mandate sex offender disclosures in real estate transactions? Or D, the Environmental Hazard Disclosure Form? The answer is C, Kentucky does not mandate sex offender disclosures in real estate transactions. Kentucky law does not require sellers to disclose information about nearby sex offenders. Buyers are encouraged to check public resources for such information available under Megan's Law. How should sellers handle disclosures related to past property repairs in Kentucky? Is it A, sellers should only disclose repairs if requested by the buyer? B, sellers must disclose any significant repairs they are aware of? C, sellers are not required to discuss any repairs beyond 5 years? Or D, sellers should disclose only unsafe repairs made in the last year? The answer is B, sellers must disclose any significant repairs they are aware of. Disclosure must include significant repairs as they could influence the buyer's perception and decision. Kentucky law emphasizes transparency in real estate transactions to protect buyers. What must sellers disclose regarding water supply systems according to Kentucky law? Is it A, the quality of public water services? B, the existence of any private water source or well? C, detailed water usage history? Or D, potential water main disruptions? The answer is B, the existence of any private water source or well. Kentucky law mandates the disclosure of any private water sources, such as wells, to inform buyers about the property's water supply system and its potential maintenance requirements. In Kentucky, which hazardous material must be disclosed when selling a property built before 1978? Is it A, lead-based paint? B, asbestos insulation? C, mold spores? Or D, radon levels? The answer is A, lead-based paint. Under federal guidelines enforced by Kentucky, sellers of homes built before 1978 must provide a lead-based paint disclosure due to health risks associated with exposure. Transfer of title in Kentucky. Which document is primarily used to transfer real property ownership in Kentucky? Is it A, deed, B, lease, C, mortgage, or D, title report? The answer is A, deed. In Kentucky, a deed is the essential legal instrument for transferring ownership of real property. The deed must be written, signed, and duly recorded to be effective. In Kentucky, what is the function of a general warranty deed? Is it A, provides limited warranties, B, assures title is free from encumbrances, C, offers no warranty at all, or D, transfers ownership with unpaid property taxes? The answer is B, assures title is free from encumbrances. A general warranty deed in Kentucky guarantees the title is free from encumbrances and past title defects, offering the most extensive protection to buyers. How must deeds be executed to be valid in Kentucky? Is it A, orally, B, electronically without witnesses, C, in writing and signed by the grantor, or D, with a handshake? The answer is C, in writing and signed by the grantor. Kentucky law requires that deeds be in writing, signed by the grantor, and typically acknowledged before a notary to be recorded. What is the purpose of recording a deed in public records in Kentucky? Is it A, to confirm ownership for the grantor, B, to provide notice to third parties, C, to prevent the property from being sold, or D, for taxation purposes? The answer is B, to provide notice to third parties. Recording a deed in Kentucky provides constructive notice to third parties of the property's ownership and helps protect the property under state law against undisclosed claims. Who acknowledges the validity of a deed in Kentucky? Is it A, the notary public, B, the buyer, C, the title company, or D, the county clerk? The answer is A, the notary public. In Kentucky, a notary public's acknowledgement is required for a deed to be legally effective and recorded, ensuring the document's authenticity and accuracy. What is a quitclaim deed primarily used for in Kentucky real estate transactions? Is it A, to provide a comprehensive warranty regarding the property's title, B, to convey any interest the grantor has in a property without warranties, C, to guarantee against any future claims on the property, or D, to secure a mortgage lien on the property? The answer is B, to convey any interest the grantor has in a property without warranties. In Kentucky, a quitclaim deed transfers whatever interest the grantor holds in the property without any warranties of title, commonly used between family members or to clear title defects. Which of the following is required for a deed to be recorded in Kentucky? Is it A, notarization and witness signatures, B, an attached land survey, C, payment of all property taxes, or D, approval from the Kentucky Real Estate Commission? The answer is A, notarization and witness signatures. Deeds in Kentucky must be notarized and have witness signatures when required. Recording provides public notice of the transaction and helps protect property rights. Earnest money and escrow in Kentucky. In Kentucky, what happens to earnest money if a real estate transaction does not close? Is it A, it is automatically returned to the buyer, B, it is held by the broker indefinitely, C, the parties must agree on how it will be dispersed, or D, it is split between the buyer and the seller? The answer is C, the parties must agree on how it will be dispersed. When a transaction does not close in Kentucky, the disposition of earnest money must be mutually agreed upon by the involved parties as per the contract or resolved according to its terms. Which entity regulates the proper handling of earnest money in Kentucky real estate transactions? Is it A, Kentucky Department of Revenue, B, Kentucky Real Estate Commission, C, Kentucky Bar Association, or D, Federal Reserve Bank? The answer is B, Kentucky Real Estate Commission. The Kentucky Real Estate Commission is responsible for regulating real estate practices, including the proper handling of earnest money to ensure compliance with state laws. What must a real estate broker in Kentucky do with earnest money received in a transaction? Is it A, deposit it into their personal bank account, B, immediately deposit it into an escrow account, C, hold it until the transaction closes before depositing, or D, use it for transaction-related expenses? The answer is B, immediately deposit it into an escrow account. Kentucky law requires brokers to deposit earnest money into an escrow account within a specified time frame to prevent commingling with personal or business funds. This protects all parties involved. If a Kentucky real estate transaction falls through, how long does the broker have to resolve any disputes regarding earnest money? Is it A, 30 days, B, 15 days, C, as soon as reasonably possible, or D, 60 days? The answer is C, as soon as reasonably possible. Kentucky does not specify an exact time frame for dispute resolution over earnest money. It requires brokers to resolve these issues expediently and in adherence to contractual obligations. In Kentucky, who determines the disposition of earnest money in case of a contractual disagreement? Is it A, the seller's attorney, B, the broker handling the transaction, C, the Kentucky Real Estate Commission, or D, a mutual agreement between the buyer and seller? The answer is D, a mutual agreement between the buyer and seller. The resolution regarding earnest money disputes in Kentucky should be achieved through mutual agreement between the parties involved, or if necessary, through legal means or mediation. In Kentucky, when must earnest money be deposited into an escrow account by a real estate broker? Is it A, within 1 business day of receipt, B, within 3 business days of receiving the check, C, within 7 calendar days of the contract's execution, or D, by the end of the month in which the money was received? The answer is B, within 3 business days of receiving the check. Kentucky law mandates that earnest money be deposited into an escrow account within 3 business days to ensure funds are properly handled and are available if needed. Who is responsible for resolving disputes regarding earnest money in Kentucky real estate transactions? Is it A, the real estate licensee holding the deposit, B, the Kentucky Real Estate Commission, C, the courts if mediation fails, or D, the buyer's legal counsel? The answer is C, the courts if mediation fails. When parties cannot resolve a dispute over earnest money, Kentucky law allows for court intervention if alternatives like mediation do not succeed, ensuring the funds are distributed fairly.
Notice the code in the corner? When you're stumped by a question, enter it at Birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Kentucky real estate taxes. Which of the following individuals typically is responsible for paying property taxes on real estate in Kentucky? Is it A, the property owner, B, the lessee, C, the mortgagor, or D, the listing agent? The answer is A, the property owner. In Kentucky, the property owner is responsible for paying real estate property taxes, which are assessed based on the value of the property as determined by local government assessors. What is the statutory priority of property tax liens in Kentucky? Is it A, junior to all other liens, B, senior to all other liens, C, equal in priority to mechanics liens, or D, junior to federal tax liens? The answer is B, senior to all other liens. In Kentucky, property tax liens are senior to other liens, including mortgages and federal liens, ensuring they are satisfied first during a foreclosure proceeding or sale of the property. How often are property taxes typically assessed in Kentucky? Is it A, annually, B, biennially, C, monthly, or D, quarterly? The answer is A, annually. Kentucky assesses property taxes on an annual basis. Local assessors determine the value of the property each year to ensure the taxes reflect current property values. What is the penalty for failing to pay property taxes on time in Kentucky? Is it A, interest accrues monthly until paid, B, a flat fee is charged after 6 months, C, property is immediately foreclosed, or D, license suspension for agents? The answer is A, interest accrues monthly until paid. In Kentucky, failure to pay property taxes on time results in interest accruing monthly on the unpaid amount. This penalty encourages timely payment of property taxes by owners. Which type of property is generally exempt from property taxes in Kentucky? Is it A, public school buildings, B, luxury residential homes, C, private business properties, or D, newly constructed homes? The answer is A, public school buildings. In Kentucky, certain properties like publicly owned buildings, including school properties, are exempt from property taxes. This exemption supports community services by lowering operating costs. What department is primarily responsible for assessing property taxes in Kentucky? Is it A, Kentucky Department of Revenue, B, Kentucky Department of Education, C, Kentucky Department of Transportation, or D, Kentucky Department of Health? The answer is A, Kentucky Department of Revenue. The Kentucky Department of Revenue is tasked with overseeing the assessment and administration of property taxes in the state, ensuring compliance and effective tax collection. What is the primary basis for determining property tax rates in Kentucky? Is it A, property valuation, B, owner's income, C, location of the property, or D, property size? The answer is A, property valuation. Kentucky determines property tax rates based on the appraised value of real estate. This method ensures that tax is proportionate to the property's market value. Kentucky real estate licensing and regulation. What is the minimum age requirement to apply for a real estate license in Kentucky? Is it A, 18 years, B, 19 years, C, 21 years, or D, 16 years? The answer is A, 18 years. In Kentucky, the requirement to apply for a real estate license includes being at least 18 years old, per the guidelines set by the Kentucky Real Estate Commission. Which of the following is a requirement for obtaining a real estate license in Kentucky? Is it A, residency, B, completion of 96 hours of pre-license education, C, pass a physical fitness test, or D, hold an associate's degree? The answer is B, completion of 96 hours of pre-license education. Kentucky law requires potential real estate agents to complete 96 hours of approved real estate education courses before they can apply for the licensing exam, as defined by the Kentucky Real Estate Commission. What must a candidate do after passing the Kentucky Real Estate exam to receive their license? Is it A, register with a brokerage, B, start their own brokerage immediately, C, purchase a property, or D, renew their license annually? The answer is A, register with a brokerage. In Kentucky, after passing the real estate exam, an applicant must be sponsored by a licensed brokerage to activate their real estate salesperson license. How many attempts are allowed to pass the Kentucky Real Estate Licensing exam? Is it A, unlimited attempts, B, 2 attempts within 1 year? C. 3 attempts within a year? Or D. 1 attempt only? The answer is C. 3 attempts within a year. Licensed candidates are generally given up to 3 attempts to pass both the national and state portions of the Kentucky real estate exam within 1 year from the initial attempt. What criminal history must be disclosed when applying for a Kentucky real estate license? Is it A. only felonies, B. only misdemeanors, C. both felonies and misdemeanors, or D. no criminal history required? The answer is C. both felonies and misdemeanors. Applicants must disclose both felony and misdemeanor criminal history in their real estate license application in Kentucky as part of their eligibility assessment conducted by the Kentucky Real Estate Commission. What is the Kentucky Real Estate Commission responsible for? Is it A. issuing and renewing licenses for real estate professionals, B. providing real estate loans to new agents, C. setting maximum real estate commission rates, or D. ensuring fair housing compliance? The answer is A. issuing and renewing licenses for real estate professionals. The Kentucky Real Estate Commission manages the issuance, renewal, and regulation of real estate licenses, ensuring compliance with state statutes and regulations. Which document must be obtained to conduct real estate transactions legally in Kentucky? Is it A. real estate license, B. brokerage agreement, C. property deed, or D. title insurance? The answer is A. real estate license. In Kentucky, a real estate license must be obtained to legally engage in the buying, selling, leasing, or managing of real estate. Kentucky Real Estate Commission. What is the primary function of the Kentucky Real Estate Commission? Is it A. to provide financial loans for home buyers, B. to regulate and license real estate professionals in Kentucky, C. to set local property taxes, or D. to enforce federal fair housing laws? The answer is B. to regulate and license real estate professionals in Kentucky. The Kentucky Real Estate Commission is tasked with regulating the real estate industry in Kentucky, primarily through licensing and ensuring compliance with state regulations. Which of the following actions can the Kentucky Real Estate Commission take against a licensee who violates state regulations? Is it A. impose a fine, B. incarcerate the licensee, C. confiscate the property involved, or D. modify the property title? The answer is A. impose a fine. The Kentucky Real Estate Commission can impose fines, suspend, or revoke licenses as part of its regulatory and disciplinary functions. How often must a Kentucky real estate license be renewed according to KREC rules? Is it A. annually, B. every 2 years, C. every 3 years, or D. every 5 years? The answer is A. annually. Kentucky real estate professionals must renew their licenses annually as required by the KREC, ensuring compliance with continuing education and regulatory standards. What is required by the KREC from licensees for continuing education? Is it A. 5 hours every 3 years, B. 12 hours annually, C. 15 hours biennially, or D. no continuing education is needed? The answer is B. 12 hours annually. Licensees in Kentucky must complete 12 hours of continuing education annually to enhance their professional skills and knowledge, as stipulated by the KREC. What does KREC require when a licensee changes their brokerage? Is it A. nothing, KREC doesn't need to be informed, B. notification within 10 days of the change, C. simply inform the local city office, or D. apply for a new real estate license? The answer is B. notification within 10 days of the change. KREC requires licensees to notify them of any brokerage changes within 10 days to ensure that records accurately reflect current employment affiliations. Let's continue with a review of Kentucky real estate finance. Loan fundamentals. What is the primary function of a mortgage in Kentucky real estate finance? Is it A, a security instrument that guarantees the repayment of a loan? B, a legal document transferring ownership of the property? C, an insurance policy protecting the lender? Or D, a temporary short-term loan for renovations? The answer is A, a security instrument that guarantees the repayment of a loan. In real estate finance, particularly in Kentucky, a mortgage serves as a secure instrument that ensures the repayment of a loan by using the property as collateral. This security interest is foundational in lender-borrower agreements. Which party holds the title in a deed of trust used instead of a mortgage in Kentucky? Is it A, the lender, B, the borrower, C, the trustee, or D, the real estate agent? The answer is C, the trustee. In a deed of trust, a trustee holds the legal title to the property until the borrower repays the debt. This ensures the lender can secure the property if default occurs, differing from a standard mortgage where the lender holds the lien directly. Which of the following fees is often associated with a real estate loan in Kentucky? Is it A, title search fee, B, appetizer party fee, C, decorating fee, or D, lease cancellation fee? The answer is A, title search fee. A title search fee is a standard cost in Kentucky real estate finance, ensuring that the property's title is clear of issues. This step is critical in securing marketable title before funding a loan. How does a fixed-rate mortgage benefit home buyers in Kentucky? Is it A, provides constant monthly payments, B, offers flexible payment schedules, C, requires low initial down payments, or D, ensures lower interest rates? The answer is A, provides constant monthly payments. Fixed-rate mortgages offer the advantage of predictability by locking in the interest rate and providing steady monthly payments throughout the loan term. This stability helps buyers plan effectively without inflationary concerns. What is amortization in the context of Kentucky real estate loans? Is it A, the gradual repayment of a loan's principal over time, B, the increase in loan interest rates, C, the refinancing of a mortgage, or D, the immediate full payment of a loan? The answer is A, the gradual repayment of a loan's principal over time. Amortization is crucial in real estate loans, referring to how regular payments gradually pay down the principal over the loan term, reducing the balance while also covering interest. This concept helps manage affordability for borrowers. What is a key characteristic of an adjustable-rate mortgage in Kentucky real estate finance? Is it A, interest rate remains the same throughout the loan term, B, interest rates change based on a benchmark or index, C, principal balance increases over the term of the loan, or D, always has a fixed monthly payment? The answer is B, interest rates change based on a benchmark or index. An adjustable-rate mortgage features an interest rate that may change based on an economic index or benchmark, affecting monthly payments. Borrowers benefit during low rates, but risk higher payments if rates increase. Which type of Kentucky loan provides veterans with competitive interest rates and requires no private mortgage insurance? Is it A, a conventional loan, B, an FHA loan through the Federal Housing Administration, C, a VA loan through Veterans Affairs, or D, a USDA loan through the U.S. Department of Agriculture? The answer is C, a VA loan through Veterans Affairs. VA loans, backed by the Department of Veterans Affairs, offer veterans competitive rates and eliminate the need for private mortgage insurance, fostering easier access to homeownership for eligible veterans. Loan types. What is a primary benefit of a VA loan compared to a conventional loan? Is it A, lower interest rates, B, no down payment requirement, C, no mortgage insurance, or D, all of the above? The answer is D, all of the above. VA loans, guaranteed by the U.S. Department of Veterans Affairs, offer benefits like no down payment, competitive interest rates, and no requirement for private mortgage insurance, which conventional loans often require. Which type of loan is government insured and often allows for lower credit scores? Is it A, a conventional loan, B, a FHA loan through the Federal Housing Administration, C, a VA loan through Veterans Affairs, or D, a USDA loan through the United States Department of Agriculture? The answer is B, a FHA loan through the Federal Housing Administration. FHA loans, insured by the Federal Housing Administration, are designed to help low to moderate income borrowers who may not qualify for conventional loans, often allowing lower minimum credit scores. In the context of Kentucky real estate finance, what does PMI stand for? Is it A, private mortgage insurance, B, public mortgage investment, C, principal mortgage interest, or D, premium mortgage installment? The answer is A, private mortgage insurance. PMI, or private mortgage insurance, is required by lenders when the borrower's down payment is less than 20% of the home's price, and it protects the lender in case of default. Which type of loan is specifically designed for rural and suburban homebuyers to access affordable financing? Is it A, FHA loan through the Federal Housing Administration, B, a VA loan through Veterans Affairs, C, conventional loan, or D, a USDA loan through the United States Department of Agriculture? The answer is D, loan. USDA loans, offered by the U.S. Department of Agriculture, cater to rural homebuyers meeting specific location and income requirements, providing favorable terms and no down payment. Why might a borrower opt for an FHA loan over other types of loans? Is it A, to avoid paying for mortgage insurance, B, to qualify with a lower credit score, C, for benefits offered to veterans, or D, to purchase rural properties? The answer is B, to qualify with a lower credit score. Borrowers choose FHA loans due to their relaxed credit requirements, allowing individuals with lower credit scores to qualify, coupled with smaller down payments compared to conventional loans. Which characteristic is unique to conventional loans compared to government-backed loans like FHA or VA? Is it A, they require private mortgage insurance if the down payment is less than 20%, B, they are offered only to first-time homebuyers, C, they are exclusively for veterans, or D, they are insured by the federal government? The answer is A, they require private mortgage insurance if the down payment is less than 20%. Conventional loans are private sector loans and are not insured by the federal government. They typically require PMI if the buyer's down payment is less than 20%, which differs from the framework of FHA or VA loans. What is one primary advantage of FHA loans in Kentucky real estate finance? Is it A, they eliminate all closing costs for buyers, B, they offer lower down payment options compared to most conventional loans, C, they are only available for luxury homes, or D, they do not require a credit check for approval? The answer is B, they offer lower down payment options compared to most conventional loans. FHA loans support buyers with lower down payment options, typically starting at 3.5%, and more flexible credit conditions, making them appealing to first-time buyers or those with less competitive credit histories.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Loan qualifications. Which of the following is not typically a consideration when assessing a borrower for a real estate loan in Kentucky? Is it A, credit score, B, income stability, C, type of employment, or D, political affiliation? The answer is D, political affiliation. Loan qualifications in Kentucky consider factors such as income, credit, and employment stability. Political affiliation is unrelated and cannot legally influence loan decisions. What is the primary role of the debt-to-income ratio in loan qualification? Is it A, to determine the property's value, B, to assess the borrower's purchasing power, C, to calculate income taxes owed, or D, to establish the loan's interest rate? The answer is B, to assess the borrower's purchasing power. Lenders use the DTI ratio to evaluate whether a borrower can afford new debt based on their existing obligations and income, ensuring sustainable loan commitments. Which Kentucky-specific regulation must lenders adhere to when determining eligibility for a real estate loan? Is it A, Truth in Lending Act, B, Kentucky Consumer Protection Act, C, Real Estate Settlement Procedures Act, or D, Fair Housing Act? The answer is B, Kentucky Consumer Protection Act. The Kentucky Consumer Protection Act includes key provisions that apply to consumers entering into real estate loan agreements, ensuring fair practices specific to the state. How does an underwriter use an applicant's employment history in the loan qualification process? Is it A, to project future property taxes, B, to assess job stability and income consistency, C, to determine appropriate mortgage insurance, or D, to calculate the down payment amount? The answer is B, to assess job stability and income consistency. Underwriters examine employment history to ensure the borrower has a stable income stream, which indicates the ability to fulfill loan obligations consistently. What is the significance of an appraisal in the Kentucky loan qualification process? Is it A, it determines the loan's interest rate, B, it verifies the property's market value, C, it decides the borrower's credit score, or D, it sets the closing costs? The answer is B, it verifies the property's market value. Appraisals are crucial in the loan qualification process as they confirm the property's value, ensuring that the loan amount aligns with the property's market worth. What is the function of credit score in determining loan qualifications in Kentucky? Is it A, it determines the interest rate applied to a loan, B, it assesses the borrower's creditworthiness and risk, C, it is used only to set loan term lengths, or D, it ensures the borrower has sufficient collateral? The answer is B, it assesses the borrower's creditworthiness and risk. Credit scores are a major factor in loan qualifications, providing lenders insights into the borrower's creditworthiness and financial responsibility, impacting approval and terms. Which factor is crucial in assessing the mortgage insurance need for a loan applicant in Kentucky? Is it A, the applicant's loan amount, B, the loan-to-value ratio, C, the applicant's age, or D, the type of property being purchased? The answer is B, the loan-to-value ratio. Mortgage insurance is typically required when the LTV ratio exceeds 80%, protecting the lender if the borrower defaults. High LTV ratios indicate higher lender risk. The loan application process. What is the primary purpose of a mortgage loan application? Is it A, to calculate the loan interest rate, B, to gather detailed borrower and property information, C, to secure a loan commitment from a lender, or D, to register the property with the county? The answer is B, to gather detailed borrower and property information. The mortgage loan application gathers essential details about the borrower's financial condition and property specifics. This information helps lenders assess creditworthiness and the property's suitability as collateral. Which form is commonly used for mortgage loan applications in Kentucky? Is it A, Fannie Mae Form Teser 3, B, the HUD-1 form, C, Truth in Lending Disclosure, or D, RESPA Regulation Worksheet? The answer is A, Fannie Mae Form 1 Teser 3. The Fannie Mae Form Teser 3 is the standard form used to apply for mortgages across the United States, including Kentucky, providing lenders with consistent and complete borrower information. What information is typically verified by lenders during the loan application process in Kentucky? Is it A, borrower's educational background, B, borrower's employment history and income, C, spouse's financial contributions, or D, last 3 years of tax returns? The answer is B, borrower's employment history and income. Lenders usually verify the borrower's employment history and income to ensure a stable source of repayment for the loan, complying with standard lending practices within the U.S. Which document ensures compliance with Kentucky fair lending laws during the application process? Is it A, Credit Report Authorization Form, B, Loan Estimate, C, Deed of Trust, or D, Property Appraisal Report? The answer is B, Loan Estimate. The loan estimate includes detailed loan terms and costs, promoting transparency in the loan application process, which aligns with Kentucky's fair lending standards and federal regulations. If a borrower in Kentucky receives a loan application denial, what should they typically receive from the lender? Is it A, a copy of the appraisal report, B, notice of action taken, C, a reassessment invitation, or D, a new loan application? The answer is B, notice of action taken. Upon denial, lenders are mandated by regulations, such as the Equal Credit Opportunity Act, to provide a notice of action taken, which explains the reasons for the decision, supporting transparency and fairness. What is the significance of an individual's credit report in the loan application process in Kentucky? Is it A, to determine the applicant's employment status, B, to assess the applicant's creditworthiness, C, to verify the property value, or D, to establish a loan amount? The answer is B, to assess the applicant's creditworthiness. Credit reports are critical for lenders to assess an applicant's creditworthiness by reviewing their borrowing history and payment patterns, influencing loan approval and terms. Underwriting for Kentucky real estate. What is the primary purpose of underwriting in Kentucky real estate finance? Is it A, to set interest rates for loans, B, to assess and mitigate lender risk, C, to finalize loan documentation, or D, to establish sales commissions? The answer is B, to assess and mitigate lender risk. Underwriting in Kentucky real estate finance serves to assess the borrower's financial capacity and property's value, reducing potential risks for lenders. It ensures compliance with standard lending criteria and minimizes potential loan defaults. Which factor is not typically considered during the underwriting process in Kentucky? Is it A, borrower's credit history, B, property value and condition, C, borrower's digital marketing skills, or D, borrower's income and employment status? The answer is C, borrower's digital marketing skills. Underwriting focuses on financial viability and property condition. Non-relevant skills such as digital marketing are excluded from traditional underwriting evaluations. The process examines credit, income stability, and property worth to ensure loan security. How does an underwriter verify a borrower's income during the underwriting process? Is it A, by checking the borrower's social media accounts, B, through multiple pay stubs and tax returns, C, by reviewing the borrower's spending habits, or D, by examining the borrower's employment contract alone? The answer is B, through multiple pay stubs and tax returns. Underwriters rely on documented evidence such as pay stubs and tax returns to verify a borrower's income. This ensures accurate assessment of the borrower's financial stability and ability to meet loan obligations. What is the role of the appraisal in the underwriting process? Is it A, to determine the exact market value for resale, B, to assess the borrower's creditworthiness, C, to evaluate the condition and value of the property, or D, to set the property's tax assessment value? The answer is C, to evaluate the condition and value of the property. In the underwriting process, an appraisal verifies the property's value and condition. This ensures the property's worth aligns with the loan amount, reducing lender risk by preventing overlending on overvalued assets. Why is debt-to-income ratio crucial in the underwriting process? Is it A, it helps to determine the property's tax liability, B, it assesses the borrower's ability to manage monthly payments, C, it provides an overview of the borrower's saving habits, or D, it helps decide the property's insurance cost? The answer is B, it assesses the borrower's ability to manage monthly payments. The debt-to-income ratio is pivotal as it measures a borrower's capacity to manage additional debt. By comparing income with existing debts, it ensures the borrower isn't overextended financially, maintaining loan safety and repayment likelihood. What is the most common type of mortgage underwritten in Kentucky? Is it A, adjustable rate mortgage, B, fixed rate mortgage, C, reverse mortgage, or D, balloon mortgage? The answer is B, fixed rate mortgage. In Kentucky, fixed rate mortgages are prevalent due to their consistency in payments over the loan term. This predictability appeals to both lenders and borrowers, making them the most underwritten type. Loan closing. In Kentucky, who is primarily responsible for explaining the loan terms to the borrower at closing? Is it A, the real estate agent, B, the closing attorney, C, the appraiser, or D, the borrower? The answer is B, the closing attorney. In Kentucky, the closing attorney is responsible for ensuring that the borrower understands the terms and conditions of the loan. This role includes clarifying contract specifics and ensuring compliance with legal requirements. What document is typically used to itemize all closing costs in a Kentucky real estate transaction? Is it A, the promissory note, B, the title insurance policy, C, the settlement statement, or D, the mortgage deed? The answer is C, the settlement statement. The settlement statement, often referred to as a HUD-1, is used at closing to detail all costs associated with a real estate transaction, ensuring transparency for both the buyer and seller. Which of the following is not considered a closing cost in Kentucky real estate transactions? Is it A, survey cost, B, title search fee, C, loan origination fee, or D, property tax assessment? The answer is D, property tax assessment. Property tax assessments are periodic taxes levied by local governments, not transaction-related closing costs. Closing costs typically include fees like survey costs, title search, and loan origination. In a Kentucky real estate closing, when is the funding of the loan typically completed? Is it A, before the closing date, B, at the time of closing, C, 1 week after closing, or D, after the deed is recorded? The answer is B, at the time of closing. At loan closing, the funds are disbursed simultaneously with the execution of documents, occurring in tandem to facilitate ownership transfer and fulfill financial obligations smoothly. Which party is typically responsible for ensuring that all documents are correctly signed and completed during a Kentucky real estate closing? Is it A, the buyer, B, the lender, C, the title company, or D, the seller? The answer is C, the title company. The title company or settlement agent is generally tasked with overseeing the accurate execution of all closing documents, ensuring compliance with legal standards and closing requirements in Kentucky. In Kentucky, what is the role of the closing agent in a real estate transaction? Is it A, drafting the contractual agreement, B, ensuring the buyer's employment status, C, overseeing the exchange of closing documents, or D, setting the interest rates for loans? The answer is C, overseeing the exchange of closing documents. In Kentucky, the closing agent's primary responsibility is to facilitate the proper signing and exchange of all necessary closing documents to ensure a legally binding transaction. Kentucky mortgage disclosure requirements. What document must Kentucky mortgage lenders provide to borrowers at the time of application to comply with disclosure requirements? Is it A, loan estimate, B, closing disclosure, C, title insurance policy, or D, deed of trust? The answer is A, loan estimate. The loan estimate form is a central requirement under the Truth in Lending Act, ensuring borrowers receive key mortgage information. This federal requirement is echoed in Kentucky regulations, providing transparency for borrowers. When must the Kentucky mortgage disclosure be amended? Is it A, if there are changes that affect the loan terms, B, whenever the borrower requests, C, upon closing of the loan, or D, never after initial disclosure? The answer is A, if there are changes that affect the loan terms. Amendments are required under Regulation Z for any changes affecting loan costs or terms before closing. Kentucky adheres to these federal mandates to ensure borrowers receive accurate loan information. What is the primary purpose of the Kentucky mortgage disclosure requirements? Is it A, to ensure clarity on origination fees, B, to enhance borrower understanding of loan terms, C, to speed up the loan endorsement process, or D, to determine property value? The answer is B, to enhance borrower understanding of loan terms. Kentucky mortgage disclosure requirements prioritize transparency and clarity. Aligned with the Truth in Lending Act, aims to ensure borrowers clearly understand loan terms and associated risks before committing. Which federal law primarily influences Kentucky's mortgage disclosure requirements? Is it A, Real Estate Settlement Procedures Act, B, Truth in Lending Act, C, Fair Housing Act, or D, Equal Credit Opportunity Act? The answer is B, Truth in Lending Act. Kentucky's mortgage disclosure requirements are mainly guided by TILA, which mandates transparency in credit transactions to ensure that consumers are informed of the costs and terms. This ensures borrowers understand all financial obligations. How long before closing most borrowers in Kentucky receive the closing disclosure? Is it A, 1 business day, B, 3 business days, C, a week, or D, at the time of application? The answer is B, 3 business days. The CFPB requires lenders to provide the closing disclosure 3 business days before closing. This rule, applicable in Kentucky, ensures borrowers have adequate time to review loan details and resolve discrepancies. What essential information must be included in the Kentucky mortgage disclosure according to state requirements? Is it A, borrower's employment history, B, interest rate and payment terms, C, purchase agreement details, or D, homeowner's insurance information? The answer is B, interest rate and payment terms. The Kentucky mortgage disclosure must include interest rate and payment terms. This aligns with both state and federal requirements to ensure borrowers are fully informed about their loan's financial details. Who is primarily responsible for ensuring the accurate completion of a Kentucky mortgage disclosure? Is it A, real estate agent, B, loan officer, C, home inspector, or D, title company? The answer is B, loan officer. Loan officers are tasked with the accurate completion of mortgage disclosures, ensuring compliance with state regulations and helping borrowers understand loan terms.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.